Welcome to i-TUTOR Economics NCERT series. We were studying chapter 9 Fiscal Economics and we had covered till the topic Functions of Modern State. And today we are going to start with a very new topic, Public Expenditure. Now listen carefully. When we talk about public expenditure, we are simply talking about how the government spends money. Just like a family spends money on food, education, electricity and travel, the government also spends money, but on a much bigger scale for the entire country. So, public expenditure means all the expenses made by the central government, state government and local governments like municipalities and panchayats for the welfare and development of the people. So what is called public expenditure? All the expenses made by the central government, state government and local governments for the welfare and development of the people. The government spends on many things like for building roads, bridges, dams, then paying salaries to teachers, police and doctors, running schools and hospitals, defense and security, welfare schemes like pensions and subsidies, etc. Okay, so what is public expenditure? What is public expenditure? Imagine a class where a teacher collects money from all students to buy common things like a projector, marker, charter or to organize a school event. So these things are not for one student but for everyone in the class. Similarly, public expenditure means money spent by the government, central, state or local to provide things that everyone in society needs. So the simple definition for public expenditure is, it is the money spent by government authorities to fulfill the common needs of all people in the country. Okay, let's break it down. Public authorities means government at all levels. Expenditure refers to money they spend. And collective social wants means needs of everyone like roads, schools, hospitals, street light, police, etc. For example, building a road, providing free vaccination, running government schools, giving pensions, maintaining public parks, etc. So all these are public expenditure because they benefit the public as a whole. Now, classification of public expenditure. Public expenditure can be classified into two major ways. What are they? Classification on the basis of benefit and classification on the basis of function. So let's look at the first one, classification on the basis of benefit. This classification was given by Cohn and Plen. Okay, Cohn and Plen. So it tells us who gets the benefit from the government spending. Expenditure that benefit the whole society means everyone receives the benefit. For example, administration, defense, education, transport, public health, etc. So these are basic services needed by all citizens. So this is the first one. Then expenditure that gives a special benefit to some people but also common benefit to society. Okay, that is a small group benefits directly but everyone benefits indirectly. For example, administration of justice or courts. Courts directly help people involved in cases, but they also create laws and order for the whole society. Then third one, expenditure directly helping a particular group but indirectly helping the entire society. Some groups get direct support but society becomes better because of that support. For example, social security, public welfare, pension, unemployment relief, etc. Indirectly, people becoming more stable and productive. So society benefits. And the third one, expenditure that gives benefit only to particular individuals. Only a selected group gets the advantage. For example, subsidy to a particular industry. Only that industry directly benefits. So these are the classification on the basis of benefits. What are the? Expenditure that benefits the whole society. Then expenditure that gives a special benefit to some people but also common benefit to society. Then expenditure directly helping a particular group but indirectly helping the entire society. And also expenditure that gives benefit to a particular individual. Now, classification on the basis of function. This classification was explained by Adam Smith, and it focuses on what the government does or its functions. So what are its functions? First one, protection function. To keep the country safe, they are doing protection function. For example, defense, that is protect from other countries. Then police, maintain law and order. Courts, protect justice. So these are essential for security and safety. Then they also do commercial functions to promote trade and business activities. For example, developing transport, developing communication like ports, railways, roads, postal system, etc. So these help businesses, commerce and economic activity. Third one, development functions. To promote economic and social development, they do development functions. For example, building infrastructure, supporting industries, power supply, irrigation, technology development, etc. So these build the long-term growth of the country. So these are the classification on the basis of function. What are they? Protection function, commercial function and development function. Now, causes for the increase in government expenditure. Today, modern governments are welfare states, right? This means the government is not only protecting people but also providing services like education, health, road, subsidies, pension, etc. Because of this, government expenditure keeps increasing year after year. So let us study the major reasons one by one. First, population growth. India's population increased from 36.1 crore in 1951 to 121 crore in 2011. When population grows, government has to spend more on schools and colleges, hospitals, law and order, transport, water, housing, etc. Young people need more schools, colleges, skill training, and old people need pension, healthcare, social security, etc. So automatically expenditure rises because of this population growth. Second one, defense expenditure. Modern defense equipment is very costly. India's defense spending increased from 10,874 crore in 1991 to 2,95,511 crore in 2018-19. Why? The reasons are, yes, need for modern weapons, then border tensions, internal security, technology, upgrades. Thus, defense is one of the biggest component of government expenditure. Next, government subsidies. So, government gives subsidies on food, then fertilizers, education, exports, loans to priority sectors and so on. So, subsidy cost increased from 29,581 crores in 1990-91 to 2,29,715 crores in 2018-19. Even corporates gets incentives more than 5 lakh crores. This creates huge pressure on the budget. So they are spending on government subsidies. Then debt servicing. We know that government borrows money from public banks, other countries and international organizations. When borrowing increases, interest payment also increases, and interest payment rose from 21,500 crore in 1990-91 to 5,75,794 crore in 2018-19. That means a large part of the budget is spent on just on interest payment. Now, next one, development projects. Government invests in big projects like dams, irrigation, steel plants, power projects, roads and railways, telecommunications and so on. So these projects require huge investment and long-term spending that will eventually increase the public expenditure. Then urbanization. In 1950-51, 17% urban population was there, but now it is 43%. That is 54 plus cities have more than 10 lakh population. And urban areas need better roads, waste management, public transport, water supply, safety and law and order. So these increase government spending massively. Then industrialization. Basic and heavy industries need huge capital and time to give return. In developing countries, private sector cannot handle this alone. So government invest in power, fuel, transport, communication, heavy machinery and so on. So this increases expenditure. And the final one, grants and aid to states and union territories. The central government provides financial helps to state for natural disasters, then floods, cyclones, earthquake, drought relief, development needs, etc. And these grants have increased greatly, adding to public expenditure. Okay, so that's all about the causes for the increase in government expenditure. What are they? Population growth, defense expenditure, government subsidies, debt servicing, development project, urbanization, industrialization, and also increase in grants and aid to states and union territories. Now we are moving to the next topic, that is public revenue. What is meant by public revenue? Public revenue refers to all the income that the government receives from different sources. A government needs money to perform its functions like providing education, healthcare, roads, defense, subsidies, pensions, etc. And this money comes from public revenue. Okay, why is public revenue important? Think of government as a big service provider. Okay, to run all these services, it needs a steady flow of income. Just like a family cannot survive without income, a government also cannot function without revenue. So what is the link between public expenditure and public revenue? The amount of public revenue depends on how much the government needs to spend, that is public expenditure, and also how much people are able to pay, that is ability to pay. So more development activities is equal to more spending, that is equal to more revenue needed. Okay, so imagine you are running a big school. You have to pay for teachers, books, building maintenance, cleanliness, electricity, etc. So to manage all this, you need income from fees or donations. Similarly, the government runs a school of the entire country and needs public revenue to finance all its responsibilities and welfare activities. Okay, now let's look at the meaning of public revenue. Okay, what is public revenue? Public revenue simply means the income of the government from all sources. The government needs money to provide services like roads, hospitals, defense, education, etc. All the money it collects is called public revenue or public income. So what is Dalton's view? Two meanings of public income. First we can look at Hugh Dalton, a famous economist. He explained that the public income has two meanings, a wide meaning and a narrow sense. So what is a wide meaning or wide sense? It is public receipt. The wide sense, it is public receipt. In the wide sense, public income includes every kind of money the government receives during a year. This includes taxes, fees, fines, grants from other government, loans, sales of government assets, etc. So this broad category is called public receipt. And what about the narrow sense? It is public revenue. In the narrow sense, public income means only those regular sources of income which the government collects without borrowing. And this includes taxes, fees, penalties, profits from public enterprises, license charges and so on. And these are known as public revenue. Okay, so public receipts is all the money the government gets, and public revenue are the regular income excluding loans. Okay, then so in the narrow sense, public income includes only the regular income of the government. These are called revenue resources. Okay, remember that loans are not included here. For example, taxes like income tax, GST, then fees like license fees, registration fees, fines and penalties, profits of government companies, interest received by the government, etc. included in the narrow sense. Okay, only revenue income, no loans are included here. And in the broad sense, it is public receipts. In the broad sense, public income includes all the money the government receives. Loans are included here. This is a wider concept. For example, all revenue resources like taxes, fees, fines, etc. Then loans from within the country, loans from foreign countries, borrowings from RBI and sales of government assets are included. So in broader sense, it is revenue income plus loans. Okay, narrow sense, only regular revenue, no loans. Broad sense, it also includes loans. Okay. Now, classification of public revenue. Public revenue mainly comes from two broad categories. What are they? Tax revenue and non-tax revenue. Okay. So let us first clearly understand tax revenue. A tax, what is meant by tax? A tax is a compulsory payment made by the citizens to the government. It is used to meet various public expenditure like roads, defense, education, hospitals, and so on. And what are the key points to remember here? Compulsory, the word compulsory, that is you cannot refuse to pay. And remember that it is a legal obligation. What is meant by legal obligation? It is collected according to law. And there is no direct benefit. That is, when you pay a tax, you do not get a specific service in return. For example, paying income tax does not mean you get a special road or special facility. Okay, so tax is a compulsory legal payment to the government without expecting any direct benefit in return. Okay. Now, what are the sources of public revenue? Do you know? Yes, public revenue mainly comes from tax revenue and non-tax revenue. Okay, before studying in detail, let us understand what a tax means through standard definition. First, let us look at the definition of Anatole Murat. He told that a tax is a compulsory payment made by a person or a firm to a government without reference to any benefit the payer may derive from the government. Okay, that means you must pay tax even if you do not get any special benefit in return. For example, paying income tax does not give you a special road or special facility. And Hugh Dalton, he told that a tax is a compulsory contribution imposed by public authority irrespective of the exact amount of service rendered to the taxpayer in return and not imposed as a penalty for any legal offense. What does that mean? That is, tax is compulsory. You pay it even if the government does not give you a service equal to the amount you paid. It is not a punishment or penalty. Okay. Now, characteristics of tax. When we talk about tax, it has certain important features. These features help us understand what makes a tax different from other payments. First, tax is a compulsory payment. That is, everyone on whom the tax is imposed must pay it. You cannot refuse to pay a tax. If you refuse, what happens? It becomes a punishable offense. For example, if you earn above a certain limit, you must pay income tax. Okay. Now, no quid pro quo. That means no direct benefit. Quid pro quo means no direct benefits. This means when you pay tax, the government does not give you a specific or direct benefit in return. You cannot say, I paid 10,000 tax, so give me 10,000 worth of service. Okay, you will not get it. So tax benefits the whole society and not one individual. For example, roads, street light, defense, then public hospitals, all these help everyone and not a single individual. Then, tax involves sacrifice. When you pay tax, a part of your income is given to the government. So every taxpayer makes a personal sacrifice, but it is for society's welfare. Then a tax is not levied as fine or penalty for breaking law. That means a fine is a punishment for breaking the law. But a tax is a regular payment collected to run the government. It is not collected because you did something wrong. Okay. Fines, it is for breaking traffic rules, and taxes for public welfare. Okay. Remember that fines is for breaking traffic rules, but taxes are for public welfare. So taxes are not collected because you did something wrong. Now, what are the sources of tax revenue? Some common taxes through which the government earns money are income tax, that is tax on individual income, corporate tax, that is tax on profits of companies, and sales tax or GST. What does that mean? Tax on the sales of goods and service. Surcharges, an extra tax charged on existing tax, usually on higher income groups. And cess, a special purpose tax collected for a specific cause like education cess, Swachh Bharat cess, and so on. And that's all about different sources of tax revenue. Now we are going to learn about non-tax revenue. Non-tax revenue means the money the government earns from sources other than taxes. It is voluntary in many cases and does not involve compulsory payment like taxes. Let's understand each source one by one. First one, fees. A fee is a payment made to the government in return for a specific service. Unlike tax, a fee is not compulsory. You pay only if you use the service. For example, passport fees, then driving license fee, court fees, university application fee, etc. So the key point to remember here is that there is direct benefit here. Quid pro quo. You pay and you get a service. And what about fines? A fine is a penalty charged when someone breaks a law. It is not a regular payment, it is a punishment. For example, traffic rules, then late filing of income tax fine, parking violation fine, etc. And a key point to remember here is that fine helps the government maintain discipline and order. And third one, earning from public enterprises. The government owns many public sector companies like PSUs, and if these companies make profit, the government gets income. For example, SBI, LIC, ONGC, Railway, Power Complaints, etc. Here you should remember that government gets dividends, profits and surplus from these enterprises. Fourth one, special assessment of betterment levy. Okay, this is a special charge collected from people who benefit directly from the government project. For example, if the government builds a park or road and because of that the land value increases in that locality, and the government charges a betterment levy from those property owners. And a key point to remember here is it is paid only by people who gain special advantage from the public projects. Then fifth one gives grants and aids. Grants are transfers of money from one government to another. For example, central government give grants to state government. State governments give grants to municipalities or panchayats. Then, when foreign countries give grants, it is called foreign aid. What are the types of foreign aid? We have food aid, technological aid, technical aid, military aid, humanitarian aid, etc. So, grants need not to be repaid. Remember that grants need not to be repaid. Okay. Now, the last one is cheats. When a person dies without legal heir or a will, his property goes to the state. This is called as cheat. For example, someone dies and nobody claims their house, the government becomes the owner. And the key point is that property without owner goes to the government. Okay. That is all about non-tax revenues. Now we are going to learn about the canons of taxation. Adam Smith, the father of economics, said that a good tax must follow certain qualities called canons of taxation. These canons apply to each individual tax and not the entire tax system. Adam Smith gave 4 canons. What are they? Canon of ability, canon of certainty, canon of economy, and also canon of convenience. First one, canon of ability. What is meant by that? Equity or fairness. That means people should pay taxes according to their ability to pay. Okay, that is rich people have to pay higher taxes, middle class, moderate tax, poor people, low or no tax. This ensures fairness. Income tax, higher income and higher tax rate. That is called canon of ability. And what is called canon of certainty? Taxes should be clear, definite and predictable. Okay, a taxpayer must know how much to pay, when to pay. So canon of certainty means taxes should be clear, definite and predictable, and a taxpayer must know how much to pay, when to pay, how to pay and to whom to pay. No confusion, no surprises, no arbitrary tax collection. And if taxes are uncertain, what happens? People lose confidence, they work less, they save less, and economic growth suffers. And the third one, canon of convenience. Tax payment should be easy, comfortable, and convenient for the taxpayer. And the government should collect tax at a convenient place and at a convenient time through a convenient method. For example, online payment. If tax payment is difficult, people avoid or delay the payment. Delay paying. Okay. For example, TDS, that is tax deducted at source. It is very convenient for salaried people. And the last one, canon of economy. That means cost of collecting taxes should be low. Government spends money on salaries for staff, office expenses, enforcement systems, etc. So if collection cost is high, the tax become a bad tax. A good tax is always cheap to collect and also brings high revenue. For example, GST is more economical to collect than multiple old indirect taxes. Okay. Now, direct tax and indirect tax. A direct tax is a tax that a person pays directly to the government. The important point is the burden cannot be shifted to someone else in direct tax. Remember that in direct tax, the burden cannot be shifted to someone else. For example, if you earn income, you must pay income tax. You cannot push it on to another person. Direct taxes are always progressive. That means rich people pay more, middle class pay moderate, and poor pay very little or none. This follows the principle of ability to pay. In India, all plans and policies for direct taxes are made by CBDT, that is Central Board of Direct Taxes under Ministry of Finance. Okay. Now, do you know what are the merits of direct taxes? First one, equity. That is fairness. Direct taxes follow the idea of equitable distribution. Since rich people pay more and poor people pay less, it promotes social and economic justice. Okay. Then certainty. A taxpayer knows when to pay, how much to pay, and what rate to pay. For example, income tax has clear slabs. This satisfies Adam Smith's canon of certainty. Third one, elasticity. When people's income increases, automatically government revenue increases. So direct taxes expand or shrink with the economy. And the last one, economy. The cost of collecting direct taxes is generally low. People pay taxes directly to the government. So less administration is required. So that's all about the merits of direct taxes. Now, do you know what are the demerits of direct taxes? First, it is unpopular. People feel the burden directly. Okay, so they often dislike paying direct taxes. Then, productivity affected. Some people may feel, if I earn more, I will have to pay more taxes. This reduces the motivation to work harder and productivity may fall. Then, inconvenient. To pay direct taxes, a person must keep accounts, file returns, pay in lump sum, and so on. So this feels difficult for many. And the last one, tax evasion. Since tax rates may feel high, some people try to hide their income. Okay, and this leads to black money generation, which is harmful for the economy. So these are the demerits of direct taxes. What are the merits of direct taxes? Equity, certainty, elasticity, and economy. And what are the demerits? Unpopular, then productivity affected, inconvenient, and tax evasion. Okay, so that's all about the merits and demerits of direct taxes. In this class, we have learned about public expenditure, public revenue, and different types of public revenue like tax revenue and non-tax revenue. Then we had covered the canons of taxation, that is canon of ability, canon of certainty, canon of convenience, and canon of economy. And we had started with the topic direct and indirect taxes, and we had covered till direct taxes and its merits and demerits. And let me ask you one question. What is called indirect tax? Is the burden, can we transfer the burden from one person to another? No. Okay. So remember that thing. Hope you understand. Thanks for watching. We can continue the balance in the next class. For more related contents, do like, share and subscribe.